Welcome back to Income Trading 101. And today we're going to take a look. Today, by the way, is July the 12th, 2021. I'm going to be trading the Dow Futures, the E-mini Dow Futures. September is the front month contract. So it's Monday morning. I need to get my levels ready. The market opens. The futures are open right now, but when the market opens, the volume really kicks in. It's about 6:40 in the morning on in Central Time, so the market will be opening in about 2 hours. So let's look at some levels because we've got a lot of really interesting things happening in the Dow right now. So I'm just gonna pull this on back. Because it's futures, it doesn't have, and this was not the front month future, it doesn't have as much data. I could go over to a rolling front month, and you know what? For this example, I just might do that. Let's take a look at a rolling front month future instead. We know in that way it fills in the rest of the data. So this period over here was actually, part of this was a June contract and the various other months, but the rolling, if you ever see that one, typically like a one exclamation point, like what's up here, YM1 exclamation point, that's the rolling 1 month, and it'll let us take a look at futures levels across the various, the individual futures contracts. So just want to get a sense of where we've been, right? So the Dow has obviously had a great run up, and we're in a period where we keep retesting a level. So just so I don't jump the gun completely, let's go ahead and start off like we always do, pulling about a year's worth of data into here, and we're going to do a little moving average analysis just to get it going. So I am going to look at a 10, a 20, and a 60-day. I actually do use this in my analysis, my actual trading. I go a little further in my actual trading, but I do like to start off the same way, so I'm getting a sense of what's going on and can use a kind of a similar vantage point or similar just market view. So obviously the Dow has had a great run up, had a pullback back in October, and then an amazing rally in November to move forward. Many of us, present company included, I've been expecting this index to come on off, expecting the overall market to come off another retest of some bearish levels, and we really haven't. I mean, look at what's happened since. Since the that top that we had back in February of 2020, just before the COVID fall off. This has just been amazing. So we'll start off here. You can see that currently we are in a period of what appears to be consolidation, and I say that because the the 60-day is actually above the 20-day. It's hard to see it, but you can see it numerically. So that implies a little bit of consolidations going on. We'll either see a strong rally to pull off of that, or a little switchover where maybe the daily will come on down and the 10-day will come down. But definitely a period of consolidation on the daily chart. Let's look at the 1 hour and just see what we see there. So in a 1 hour, we also have consolidation because even though both the green and the red are above the yellow, our 20 period is above our 10 period. And so if it was truly bullish or bearish, we would expect all three to be in line. So if the 60 were above, right now it'd be a period of bearishness. If the 10 were above the 20, I would call this bullish. So right now it's just consolidation, which means we're going to have to wait for some more data before we see a clear indication from the moving averages. Wow, we are 3 for 3 right now because you have a scenario where, and if you can't see it, you can always look at the numbers over here in the upper left-hand corner of the screen. But you have a period where the 60 is between the 20 period and the 10 period, right? So we're 3 for 3 on consolidation, just in various forms. And then here we go. On the 15-minute, we have a clear bearish signal. However, look at how we've been pulling up into this recently. So that 10 period could end up pulling higher, which would lead to another period of consolidation. So let's go back to the daily, get rid of these. We're going to actually go with the MACD as our next indicator, just to get a better sense of what's going on in this market. Looking at momentum, this is my favorite momentum indicator, but it's only my favorite for the longer term time frames. So we've obviously had a long bull market. We pulled back below the zero line, and back here in June, this would have been a couple weeks ago, June 28th, we had a bullish crossover and immediately pulled back above the zero line. So this could very well just imply a continued bullish leaning on the daily time frame. Let's look at the 1 hour. So the 1 hour gave us a crossover, a bullish crossover last week. Last week, July the 8th. It would have been last Thursday. And we crossed into bullish territory, caught that, it's a big, nice run up. Look at that, from 34,200 to over 700, almost 800, 600 points. That would have been a hell of a rally to catch on Friday, and I guess it would have been Friday, partly Saturday too. But strong move, strong move. And then we've had a bearish crossover, but it has not crossed the zero line, so I don't really trust it until it does, because I want that confirmation that we're not just going to see a continuation of the trend. The 30-minute level, and using this indicator at the shorter time frame starts to get a little sketchier. So you had a bullish crossover here and another bullish crossover really here late Thursday, which would have rallied into that move on Friday. And then you had a bearish crossover Friday afternoon through the weekend. So it appears to be approaching another bullish crossover today, but we'll have to get a few more bars of price to see. And then at the 15-minute point, you had a bearish crossover that happened Friday morning. And right now we're looking at a bullish crossover. Again, I wouldn't trust this until it does cross the zero line. And I still much prefer the MACD at longer time frames and not the shorter ones. Mostly because it's just sort of it's very volatile at the shorter time frames and harder to get a great read on what's going on. So I'm going to get rid of that. This is just a look at what has happened over the last year. That is a strong rally. We also have had a little tighter band. You can still do a few things with this tighter band here. I don't have to catch all of the data ever, right? Because in statistical terms, you'll start looking at, you always want to warn against or avoid curve fitting, which means that you've made the perfect curve, but it actually makes your analysis less relevant. So one of the best ways to do that is to be willing to get rid of some of your points. Be willing to say, okay, this may not be the best. I might miss a few points in here, even if, and that's okay, if I get the larger. I don't want to, what is the phrase? I don't want to, invalidate or harm the good with the perfect. You're not going to get a perfect scenario. We're just using this to get a hint of where things have been and just to see if it's going to continue moving in that direction. So still very much bullish. Hard not to be bullish, this index. And you could also see there's definitely room to the upside to retest these other levels, possibly even head up towards the 36,000 level. So definitely keeping my eyes open as well, because such a long rally could end up having a significant pullback. That being said, I'm very optimistic on this. I also want to give look at a few levels. I constantly like to search for support and resistance levels that might be of meaning. Actually, instead of doing that, we're going to do a little rectangle. So there's the high that we saw just pre-pandemic, and you can see that once we crossed it, it did actually. Let me zoom in on that. You can see that this area it did end up acting as support. What happened, resistance became support before we rallied off of it, and now we've been in. It's just new high after new high after new high. I'm going to make. I think this is actually pretty interesting here. A little period of support there. You can see that that played a role just a couple weeks ago, June 21st. That previous top actually ended up being support for this current market rally. And then, hard to ignore the fact that we've had multiple. Well, I didn't want to do what I wanted it to do. There we go. We've had multiple retests of this period here. So, I mean, and we're right there. So, could we see this market go above 35,000? Possibly. But look how many times we've had to test this 34,800 level, and we're sitting just a couple hundred points away from that now. I would really be inclined to see, I would actually expect to see us rally 200 points and retest that level. And then if we're going to head down, I'd expect us to head down lower pretty quickly, kind of like what we did back here the first half of June or middle June. So that is it. Look at these levels. Gives me a good idea of what to look for today in trading. We can even take this down to like a 5-minute level and just get a better sense of some of the levels that might be important today. So there you go, 34,727. Got this region here, 34,669. That's still about 24 points away from where we currently are. Could see that play a role today. You also have this previous low, 35. And I like to put one here too, just to get a better sense, but I actually don't think that one is as relevant. So, and then obviously where we're sitting right now, we're retesting this little intra morning previous resistance. Looks like we're about to break through that. Probably pick up 20 points right there pretty quickly. So anyway, that's it for my analysis of the Dow. I am actually going to trade with this today. So hope you guys have a fantastic day, a great week, and happy trading.